Good evening, everyone. I'm Rashmi from Parichay and today's moderator of the session. So I would like to welcome all of you today to our 53rd Ask the Expert webinar, Parichay. And as you know, the topic for today is unlocking the power of tax deductions. So basically, we are going to discuss the strategies for maximizing your savings. So before we dive into the topic, let me give you a quick instruction on how the session goes. So the flow of the session remains as usual. We have two parts in the session. In the first part, we will have a discussion with our today's expert, which is then followed by audience Q&A. So audience Q&A is where I can say time is all yours. You can put across your questions in the Q&A option of the Zoom control panel, and we will be more than happy to take them up. In the meantime, the session has been recorded. So if you're worried about missing out on any part of our today's session, do not worry. We have got you covered. So on this note, let's begin our today's session then. So it's all about taxes today. So as you may know, taxes are inevitable part of life, but they don't have to be overwhelming or a financial burden. In this webinar, our expert speaker, CA Ruchika Bhagat, Managing Director, Brooks Consulting Private Limited, will guide you through the world of tax deductions, explaining how you can leverage them to save money and reduce your tax liability. From commonly overlooked deductions to specific strategies for small business owners, you will learn everything you need to know to maximize your tax savings. So sit back, relax, and get ready to unlock the power of tax deductions. While we continue with our discussion, let me tell you a little more about Ms. Ruchika. CA Ruchika Bhagat is currently working as the Managing Director of Brooks Consulting Private Limited, a payroll and HR consultant firm. She is graduated from the University of Delhi in 1996. She became a member of the Institute of Chartered Accountants of India, ICAI, in 1998. She is a strategic advisor in setting up businesses in India for foreign companies and taking care of its compliances. She specializes in business advisory, tax, regulatory, and risk advisory. She is a business professional with more than 24 years of experience helping other businesses grow and be more profitable. Ms. Ruchika, we are very delighted to have you here in this session. Once again, welcome to this session.
Thank you, Rashmi. Thanks a lot for such a nice introduction, first of all. And I welcome all the guests and you also. In case any person has any query, anytime you can all ask me or text me in the chat box so that I can answer all the queries.
It's our pleasure, Ruchika. Thank you so much. Yeah. So, dear participants, with this now we are heading towards our discussion. Ruchika, to start with, let's start from the basics, I would say. According to you, what are the most common tax deductions for individuals in India?
Look, when I talk about individuals and when I talk about deductions, so for particularly when I talk about the salary class employees, so there's very limited scope of deductions. But if we judicially choose all those deductions, then I think there's a wide list of the deductions that we can cover and we can reduce our taxes. So in case if I discuss some of the common tax deductions to begin with, we all know standard deduction, and thankfully this time under new tax regime also we are having the same deduction. Earlier the government withhold it under new tax regime, but during this budget government has declared that even under new tax regime we can claim the standard deduction of rupees 50,000. Similarly, we have section 80 list of 80 deductions to begin with 80C. As we all know, 80C has endless list of investments where we can invest and we can get the deduction of rupees 1,50,000 like LIC, PPF, ESI. Then your tuition fees for children, repayment of principal, home loan, fixed deposits, etc. Similarly, we also have deductions under section 80D, that is in respect of the medical insurance premium. So if in case you are paying medical insurance premium for yourself, your parents, your spouse, or your children, then in that case you can get a deduction. And this in this case, the maximum deduction is of rupees 1 lakh. That is to begin with, it is 25,000. But if in case both the parties, you and your parent, they are senior citizen, then the maximum deduction is rupees 1 lakh. That is 50,000 each. Similarly, when we talk about individuals, then for education loan for yourself, your spouse, or your children, in case you are taking any education loan, and whatever interest amount that you are paying, you can get a deduction on that also. That is also available under section 80E. Then we have 80G, where you give deductions with regard to the donation, in case you have donation, you have given any donation to any charitable organization, then you can claim deduction under section 80G. Similarly, you have house rent allowance deduction. That is the most common deduction that we all are aware of. In case you are paying any house rent receipt, in case you are paying any rent and you are getting house rent receipt, then you can claim this HRA deduction. Similarly, as I said, that you can claim a mediclaim deduction under section 80D. So what if you have not claimed medical claim deduction, like you have not invested in any health policy, then even if that you are paying bearing any medical insurance for your dependent parents, then also you can claim that deduction. Similarly, there is also deduction under section 80DDB. If you are paying for any specific disease, then also you can get that deduction. Similarly, we have very lot of deductions. In fact, you can say, for example, per diem deduction. Per diem deduction is with regard to the allowance that the employer normally pays to its employee for each day that he has expended outside the usual work location. So whatever expenses he has incurred anywhere outside the office, but for performing the official duties, for managing his daily expenses, whether in India or outside India, if he is getting any reimbursement for that, that is also allowed as deduction, provided he submits the proof regarding that. So there is endless list under which we can get the deductions.
Sure, Ruchika, thank you so much for your elaborated answer. Also, Ruchika, while we are talking about the common tax deductions that we will encounter in India, can you please help us understand what are the common mistakes that taxpayers make when claiming tax deductions, and also how can we avoid these mistakes?
Look, say if you have a knowledge of taxes, you have knowledge of all laws related to it, then you can file your ITR yourself. Otherwise, let the professional handle your case. As you say, that the work suits in the hands of the one skilled, let him do it rather than doing it yourself. So I'll go with that proverb. In case you have knowledge, because look, income tax changes every year. Every year we have budget, there is some changes. There are normally changes in income tax. So in case you are very updated about all those changes, you are aware of the latest deductions, you are aware of the latest tax slab rates, then you can file your own returns. But in case you have any doubts, you better approach some professional for professional help. But when you are talking about the discrepancies that normally people do, the faults that normally the mistakes that normally taxpayer do while claiming these deductions. First of all, what they do, they normally don't provide the sufficient documents. For example, in case if you are claiming HRA, what happens, normally they don't support their HRA claim, which HRA receipt, which they need to provide. So unless and until you provide HRA receipt, you cannot claim this HRA deduction. Similarly, you are claiming LIC, but you are not submitting your LIC receipts. So these are basically lacuna on behalf of the taxpayer, due to which he can pay penalties in future. So these insufficient documents need to be dealt with. Similarly, sometimes what happens, as I said, lack of information is poor. Like sometimes employee himself computes the computation. So there are a lot of incorrections. There are a lot of but technical defaults in that computation, especially when I tell you this time we are having two tax regimes. So you need to check in which tax regime you will be better off, like in old regime or new regime. So once you have to calculate your tax as per old tax regime, then you have to calculate your tax as per new tax regime, and then you have to compare in which you are better off. So this normally people lack. Similarly, normally people claim ineligible expenses. As I told you, what happens is, what employee do? He charge per diem expenses also. Simultaneously, he is also claiming reimbursement, even though both of them are same. So you can claim only one. Similarly, whenever you switch off the job during the year, employee always thinks that he is going to get two standard deductions, one from the previous employer and one from the current employer, which is totally wrong. You get only one standard deduction for the entire financial year. So you need to tell your current employer, you need to disclose him all the salary components of what all salary you have received from the previous employer, so that he will add past year's employer salary along with current salary, and then he will compute your TDS. Similarly, people don't know basically what are the restrictions and limitations in deductions. As I told you, this is basic example that under section 80C, we are going to get the maximum limit of rupees 1,50,000. So even if you are investing 2,50,000, you think you can take the benefit of rupees 2,50,000, whereas the limit is only of rupees 1,50,000. So these are some common mistakes. Apart from this, what happens in case of capital gains, especially in case of capital gains, if in case you want to exempt your capital gains, you need to invest somewhere, and you need to invest it within a specified time or before filing of income tax return. In case you have not invested before filing of income tax return, and then in that case you need to invest or deposit that money, capital gain money, into capital gain account scheme. If you have not deposited into capital gain account scheme, it will be chargeable to tax. This normally people are not aware of. Similarly, one more common mistake, but what I personally find is, you are a salary employee, obviously you are going to file your ITR1. But in case you are earning long-term capital gains, you will be going to file your ITR2. What if you are earning salary, simultaneously you are having long-term capital gain? Then ITR2 will await. You cannot file your return under ITR1. So these are basically some common mistakes that normally employees do.
Sure, Ruchika. Thanks for sharing all the valuable insights. I'm sure this our attendees would have definitely made a note of this. Also, speaking about the documents, Ruchika, actually, I have a question here. So, according to you, what documentation is required to claim tax deductions, and how can individuals ensure that they have all the necessary documents in order?
Look, to claim tax deductions, individuals, they need to provide all the supporting documentation to substantiate their claim. So the specific documentation requirement, it may vary depending upon the type of deduction that you are claiming. For example, in case you are claiming the deduction of section 80G, then in that case, you need to deposit the donation receipt, original donation receipt. And that particular organization where you are donating, it should be approved under section 12A, 8A. So these are the basic requirements that you need to check, and you need to take that receipt from that particular charitable organization to claim that deduction. Similarly, Form 16, we all are aware of. We need to take Form 16 at the end of the year for my employer while filing this return. Similarly, I need also to submit my investment proofs. Investment proof in the sense your PPF details, your LIC details, your ETD deductions. So you need to submit all these investment proofs to your HR. Similarly, in case you are claiming deduction under section 80 DDB, that is for any treatment, medical treatment expenses. You are incurring any specific expenses for any specific medical treatment. So in that case, you need to provide a certificate of the doctor to claim that deduction. Without that certificate of government doctor, you cannot claim that deduction. As I told you earlier, also in case of HRA, we need to deposit HRA rent receipts. Similarly, when we claim home loan deductions, so we need to provide a bank statement, bank certificate, certifying that this much interest has been paid against home loan or this much principal amount has been paid. Similarly, when I talk about educational loan, so whatever interest amount I have paid against the education loan, I need to take a certificate from bank, and then I need to deposit that certificate along with my investment proof to my HR for claiming these deductions.
All right. Thank you so much for sharing that, Ruchika. Also, can you please throw some light on different tax planning strategies that we can use to save money in the future?
Look, when you say tax planning, so all tax planning strategies, they all lead to a better secured future, not only for you, but also for your near and dear ones. So personally speaking, nowadays, people don't like to save for unseen future, but these 4 savings that you have to do to reduce your tax, these 4 savings only help you for your better future. These 4 savings only help you for your future savings. So when I talk about the tax planning strategies, so you need to check what are your retirement plans, like how you want your retirement plan. What source you want, a regular income, you want a fixed amount in your bank at the time of retirement, or you want monthly, so you can go for annuity plans. So it all depends upon how you want to choose those plans. Similarly, the stock investments you want to do. So you have to choose whether you want to offer risky investments or you want to directly invest in the stock market, or it has to be through mutual funds. Let some professional handle your mutual funds and let him invest on your behalf. So you plan accordingly. Similarly, when we talk about FDs and RD part, like if I think I want a secured investment in my future, so I'll go for FD and RD part. So what I need to think whether I'll go for FD or I'll go for recurring deposit. If I have that much capacity to go for RD, like I can save that much, I know monthly I can keep apart this much amount, then it is better to go for RD. If I think in total I'll save this much, I can go for FD. So this all investment policies, it all depends upon the strategy that you opt, the notion you have, how you want to plan your future. But what I'll say, don't keep all the eggs in one basket. That's it. You need to remember this before investing anywhere or before making any investment decision.
Definitely, Ruchika. I think that was the wonderful answer that you gave us. Because, yeah, it's true that it's always very risky to bank upon one thing. So, having said that, Ruchika, how can individuals balance the need to save taxes, like with the need to invest their long-term financial goals? It could be retirement planning or maybe buying a home or something like that.
Look, I tell you, these generations, Z and millennial, both they share a common goal, that is their fulfilling life, but they have certain, like they normally tend to do certain mistakes, financial mistakes, which hide their progress. Like normally they overspend, or they have this habit of lack of saving, or they don't have any financial knowledge, that is they have financial ignorance. So all these basically you can say these are hindrance to achieve their financial targets. Therefore, today I want to suggest some of the easy financial lessons so that you can be, people here can be benefited of. So we can invest in different options as per our risk capacities. Similarly, we need to know what returns we expect, whether we want to invest in long term or we want to invest in short term. So these are some basic things that I need to consider before making any investments. One thing, how much I can invest. Second thing, whether it will be monthly or it will be a lump sum amount. then it will be a short term or long term. It will be a risky venture, or you want to opt for some safe road, you want to opt for some safe road, or what about returns that you want to have? So all these things. So to begin with, like budgeting and saving, when I say, so budgeting is, you can say, like, if you build up a saving habit, then only you can do a budgeting part, one thing. So there are multiple rules when you say about this budgeting and saving. So we all would have heard of that there are 3 baskets. You can always choose 3 baskets in your life. One for your daily expenses, another for your savings, and another for your wishes. Similarly, how you put in these 3 baskets, it all depends upon you. There are various rules like 50-20-30 rule. Under 50-20-30 rule, we always say that you have to spend 50% of your earnings towards your need, then 20% should be towards your savings, and then 30 towards your wishes and wants. Similarly, some people follow 20-20-60. That is, they always say 20% should be towards your savings, 20% should be towards your wants, wishes, and 60% should be towards your expenses. There are also different notions like 1% rule. You should always increase your saving by 1% until you should have at least 15% of the savings of total earnings. So these are basically some of the basic strategies that you need to follow. You need to opt any one of the strategy, so that small savings, they end up to the, they will give you large returns. They end up to a, I cannot say ocean, but still you will have a river in your hands at the time of retirement. This is what I can say. So you need to do any of the savings, you need to opt any of the plans for your future, keeping your desires, keeping your options in your mind.
Thank you so much, Ruchika. That was very informative. While we talk about savings and investments, there's another thing most of us are very curious to know about is home loans. So my question is, what are the specific deductions available to individuals who have taken their home loans, and how can they ensure they are claiming them correctly?
Look, when I say home loan, वो ना एक पैकेट में डबल मजा, that is home loan. What I think of is, why I say so, I tell you. Look, in case if you are buying any house property and you take loan on it, then there are two separate components are there. One is principal repayment, another is interest part. Whenever you pay principal amount, you get deduction under section 80C, that is maximum up to rupees 1,50,000. Second is interest part. Whenever you pay interest, so under interest, if you have a self-occupied house property, then interest is exempt up to rupees 1 lakh. If your property is let out, there is no limit for the interest. Best part is, if you have taken this property in joint name, you and your spouse, both of you have together taken this property. So both of you will be getting this separate individual deduction for repayment of loan along with interest. So this is the best part of home loan. That is why I normally suggest people that they should go for home loan whenever they want to purchase any property. But they cannot sell this property within 5 years, starting from the date when the construction has been fully completed. In case you have sold, then whatever benefits you have gained earlier, you need to reimburse those benefits to the government. So I always feel that whenever you want to take any property, it is better to go for a home loan rather than investing your entire amount in that property.
Valid point, Ruchika. Thank you for sharing that. And also, Ruchika, you brought up this point as well, the brilliant one. That is, you're talking about the completion of the house, like ready to move in kind of house, right? So now the question is, does this mean that during the period your house is being constructed, we will not be able to enjoy any tax benefits and whatsoever?
This is something good that I skipped. So in case if you have a under constructed property and you are paying interest over it, then still you can claim the deduction on that interest. That interest deduction amount will start from the year when construction is first completed. So what will happen? You will compute the interest of entire pre-construction period amount, and that interest will be divided into 5 years. Beginning from the year in which the construction is first completed, we'll start claiming this deduction. So it will be divided into 5 equal parts, but all pre-construction interest is there, that will be divided into 5 years and will be claimed from the year in which the construction is of house property is complete.
Got it. So end of the day, money is coming back to you.
Exactly.
Yeah. Thank you so much for sharing the tip here, Ruchika. Also, while we continue, dear participants, you can start putting across your questions in the Q&A option of the Zoom control panel. Soon in a few minutes, we will be taking up your questions. All right. So, Ruchika, coming back to our discussion, you gave us a lot of valuable insights on various components of tax deduction and also shared very excellent strategies, I can say. So can you please explain the deduction under section 80GG?
We are all aware of house rent allowance, that we all are aware of. Your employer is providing you house rent allowance, you are paying rent and you are claiming this deduction. So what if your employer is not providing you house rent allowance, but still you are paying any rent? You don't have to worry about it. You will get deduction under section 80GG. So in case you are any individual or HUF and you don't have any house property in your name, in the name of spouse, or to the HUF you belong, or in case of your minor child, you don't have any property, you don't own any property at the place where you reside, you are residing on rent, you are paying rent, then in that case, you can claim deduction under section 80GG. So best part is you can claim deduction of 80GG even if you are self-employed. It is not only that salary class employee can claim this, even if you are self-employed or salary class employee, any person, any individual can claim this deduction. So to claim this deduction, we need to file Form 10BA to declare that this property is on rent and you are paying this and this rent and you do not own any property at this place. So whatever interest you are paying will be claimed as deduction. Main point to be considered is that you are not getting any HRA. And the amount of deduction that you will be getting here will be least of, that is 60,000, that is 5,000 rupees per month. Amount rent paid minus 10% of your total income or 25% of your total income. So whichever will be the least will be amount of deduction that you can claim.
Got it. Yeah. Thank you for the detailed answer here, Ruchika. Also, Ruchika, in one of our questions, you were emphasizing on the HRA, the house rent allowance, which you just mentioned as well. So can we discuss in detail about this most common deduction, that is HRA?
Yes, sure. As we all know, house rent allowance is whenever you are paying any rent, you have to submit the house rent receipts to your HR and then you can claim this the house rent allowance deduction. So in this case, it depends upon where you actually reside, in metropolitan city or other than metropolitan city. Depending upon that, you get this deduction. So in case of metropolitan, it is maximum 50%. In case of non-metropolitan, it is 40% of salary. Normally, this is the deduction that all the people avail because they can easily get the rent receipts. In this case, the best part is even if you are getting rent receipt from your spouse or your relatives, still you can claim this deduction.
Okay, that was very helpful, Ruchika. Also, my question is, let's say I'm living in my own house, so can I still claim HRA here?
Look, in case you are living in your own house and you are not paying any rent, then you cannot claim this deduction. For claiming HRA, you need to pay rent. As I insisted earlier, also you need to submit your house rent receipt to your HRA to claim this deduction. So unless and until you pay any rent, you cannot claim HRA deduction.
All right. Thanks for the clarification. Also, Ruchika, while we talk about the rent receipts, is there any certain deadline, like a date, where we have to submit the rent receipts to the company as a proof?
Look, employer normally provides a deadline by which the tax proofs must be submitted, since they have to deduct TDS on it. And based on these rent receipts only, the employer give you the exemptions of HRA. So in case if you are not able to deposit this HRA rent receipts to your employer, you have missed that deadline, then you don't have to worry about it. What you can do is you can claim this HRA directly in your income tax return. Even if your employer has deducted higher tax TDS, you will claim it as a refund in that case.
Okay, got it, got it.
But personally, what I prefer is you should always submit your investment proofs within the time, so that your proper TDS is deducted. You don't have to pay any extra taxes.
Mhm. Absolutely. Yeah, definitely a very valid point, Ruchika. Also, another aspect of this is the lease agreement or the rental agreement, right? So, is it necessary to have a lease agreement with my property owner?
Yes, lease agreement basically contains all the information about the accommodation on lease, the lease period, the rent amount. So therefore, your landlord, he need to sign this lease agreement with you, and your employer should have copy of this document. You should deposit the lease agreement copy with your employer to claim this HRA deduction. Anytime your employer can ask, he has right of asking you to submit this lease agreement.
All right. So, just to clarify, Ruchika, here it is in addition to the rental receipts, right?
Exactly, yes.
All right. All right. Thank you so much. Next thing is about the staying in the rented apartment for part of the year. So let's say I stayed in my apartment for just some time during the year. So can I claim deduction of HRA?
Oh, yes, you can claim deduction. So what you will do is you will claim the deduction for that part of the year for which you have been paying rent. Similarly, what happens here, since you have asked this question, one more question can arise. In case for, let's say, 8 months you were living in non-metropolitan cities, and then for 4 months you start living in metropolitan cities. Then what will happen? Then you will claim two separate deductions of HRA. For 8 months, computation will be different. That is at the rate of 40%. For 4 months, computation will be different. That is at the rate of 50%. So depending upon, it may so happen that earlier you were not getting HRA, now you have started getting HRA, or it may so happen earlier you were getting lesser amount of HRA, and anywhere in the mid of the year you got an increment and you are getting higher amount of HRA, or you have changed the place, or you have changed the city. So in all these cases, you have to compute HRA periodically, unless and until there is any subsequent change.
Got it. Yeah. Thanks for the elaborate answer on that, Ruchika. And my next question, I'm sure you have already addressed this question of mine, but if you could just elaborate or probably reiterate on that, it would be helpful. So the question is, can I pay a rent to my relatives like father, mother, brother, or spouse, and still claim HRA deduction if I'm paying rent to them?
Yes. In case if you are paying rent to any of your relatives, be it your father, be it your mother, or your children, or your spouse, or any other relative, if you are paying any rent to them, you are getting rent receipt from them, you can claim deduction of HRA. The only thing that you need to consider is whatever rent you are paying, it has to be as per the fair market value. It cannot exceed more than fair market value. That is, it should not be inflated one, or it should not be deflated one in both the cases.
All right. Okay. So in the meantime, I can see already our participants are eager to hear from you. I'll just take up one last question from my end before we move towards the audience questions.
Sure.
So the last question is about the vehicles. So what documents are required to be maintained for vehicles wholly or partially for official duties?
Look, in case vehicle is totally used for official purpose, it is not taxable, first of all. But if in case it is being used for official purpose, then in that case, employer need to certify that entire expense have been incurred wholly and exclusively for performance of official duties. So this certificate will be given by the employer. Then all the expenses related to the vehicle will be entirely exempt. In case that vehicle is used partly official and partly personal purpose. In that case, employer need to maintain log records. Log records in the sense he need to maintain details of everything, that is detail of journey, date of journey, destination, mileage, and the amount of expenditure in each during this each journey. So unless and until he has created this log account, expenses will not be allowed as deduction. So if it is being used for partly official, partly personal, then log records to be maintained. I'm sorry for that. And in case if it is being used for entirely official purpose, then employer certificate will be sufficient.
Got it. So thank you, Ms. Ruchika, for such an insightful and knowledgeable session. I'm sure that our audience has gathered a lot of information and details on this buzzing topic. So now we will move towards our audience questions. I can already see a lot of them have been lined up here. So the very first question is from our attendee, Monica Prasad, as well as B. Narayan. So it is about per diem. So Monica would like to know what is per diem, and also Chandrasekhar and Narayan would like to know, is there any limit on per diem deduction?
Look, per diem is basically reimbursement. This is something you can say a nomenclature that is being used for reimbursement only. Either you go for per reimbursement or you go for per diem. Both are same basically. So if you are incurring any expense, if you are outside your office during office hours and your employer is reimbursing those expenses, that is per diem expenses. In case if you are providing sufficient evidence of these expenses where you have incurred them, then these are totally exempt. Like, let's say you have been able to provide documentation for 90% of the expenses, but for remaining 10% expenses, they were very nominal, like auto fare, rickshaw fare, anything like that. So you can give a certificate to your employer certifying that this 10% has been spent on these expenses. That will be also exempt in that case. So this is basically reimbursement only, against which you need to prove you need to submit the evidences where you have spent the money.
Sure. I hope that answers the question. I'll take up the next question, Ruchika. So it is from Mr. Tilak. Hi. So the question is, employees take HRA deduction under Section 1014 for rent paid by them based on the rent receipt. So from employer perspective, whether we are supposed to check whether the rent receipt is genuine or not.
Look, being employer, he can ask you regarding the genuineness of that rent receipt, one thing. Another thing, he can also ask you, as I told you earlier also, he can also ask for the rent agreement, lease agreement. So in case if he is asking for the same, then you need to deposit all those submissions. And once you have submitted, I think he can give you a deduction of HRA.
All right. Thank you so much for answering that. Ruchika, we have our next question from Aditi. I think you have already touched upon this. Just in case if something is missing, maybe we can add it here. So it's from Aditi. Hi, Aditi. So the question is, one of my employees is paying rent to her husband. So what documents are mandatorily needed to accept her HRA claim?
Look, even if you are giving rent to your spouse, still you can claim HRA. There are different case laws on this. Only point is, this rent should be the fair rental value. It should not be deflated or inflated. This is what I have been always telling the people. You can pay rent to your relatives. There is nowhere it is ever written that you cannot pay rent to your relatives. You can pay rent to your relatives provided it is the fair rental value and all your documentation part is complete. It should be genuine basically.
Sure. Thank you so much for reiterating on that. Also, dear participants, due to interest of time, we may not be able to take up all your questions, but please don't be disappointed. We'll try our best to get some response from you, probably post session as well. All right. So please don't be disappointed in any case. We will respond to you definitely. So also in the meantime, I'll just take a few more questions, Ms. Ruchika, if you're comfortable.
Sure.
Yeah. So next question is from Mr. Raghavendra. So Raghavendra would like to know more about corporate NPS.
Corporate NPS.
Yes.
So basically, when we talk about corporate NPS, look, this is the deduction that you get under section 80C. For this, you get a separate deduction of rupees 50,000. So you can also get 1,50,000 plus 50,000. So in total, you can get a deduction of rupees total 2 lakhs in case you are investing in corporate NPS.
Got it. So I hope that answers the question. Next question is from Balaji. It is about the tax regimes. So the question is, old tax regime incentivizes people to take up investment towards health, life insurance, etc. But it seems like the old tax regime will gradually go away. So your take on this, please, and what is this new tax regime?
Look, I totally agree with you. But one thing I always tell people is, look, India is having population like we are in number 1 now in population. So government cannot give social security benefits to all. You should always understand this. Our government cannot give social security benefits to all. So we ourselves should be responsible for taking all those social securities for ourselves. That is why I always say old tax regime is better, because there are forced saving. Due to those forced saving, at least you are securing your future. You are securing your old age, and you are also securing your future of your near and dear ones. So I do agree to you, Mr. Balaji.
Yeah, thank you for that, Ruchika. So, Balaji, I hope this helps. So, next question is from Jaishankar. So, this is about home loan, Ruchika. So, the question is, suppose I have home loan which covers the cap of 2 lakhs under section 80 for IT. And at the same time, I'm paying rent to my children studying at different places. So, can I claim under HRA furnishing the rent receipts for the payment made on behalf of my children? I think it's a very
sorry, but can you repeat this question again? I'm unable to understand this.
Sure. So here Jaishankar is giving us some scenario where he's already paying the home loan, which covers the cap of 2 lakhs.
Okay.
And at the same time, he's also paying the rent towards his children who is studying in different places. So if he is able to produce the rent receipts for the rent paid on behalf of children, can he claim HRA under this section?
Logically, he cannot claim.
Okay. All right. So I'll just take up one last question, Ruchika. So this was about retirement plan. So just a minute. Okay, so I think it is now missing here. All right, no worries. So dear participants, on this note, I think we are going to end the session now. But I know a few of your questions are not answered, but please don't be disappointed. You can definitely write back to Ruchika directly. I'll share the contact details, as well as you can reach out to us. Okay, so on this note, I'm just going to share a few more further details where you can reach out to us for further clarifications. One of the medium is the Great Right. So as you know, it is the a community forum initiative by Great HR, and here is the link for this. So you can also post your questions here and seek responses. And also, the recording of this session will be shared with all of you soon. For any further queries, you can write back to us on this mail ID you can see on the screen, that is rakigautam@greatip.com. So once again, on this note, we are coming to end of this session. And before I conclude this, would like to thank Ms. Ruchika for this session. You have certainly given us a lot of insights on various tax deductions and the strategies to save money on tax. And also, dear attendees, thank you so much for your participation and for making it successful. We will be back soon with another interesting topic. Till then, have a great time. Stay safe. Thank you.
Thank you, Rashmi. Thank you all the attendees.